DC. And she works in an office that's headed by a woman by the name of Holly Worthington. Holly used to be part of my team. I ran a big real estate company in the Mid-Atlantic region called Long and Foster. We had about 14,000 agents when I was running it at the time. But and Holly was part of my group. So it's really great to be connected to Compass kind of indirectly through old friends. Yeah, so I began as a loan originator in Denver, Colorado back in the early 1980s. I quickly moved up in my field. I was a top producer and became a manager, and then ultimately ran all of lending for a nationwide company. My wife and I moved around the country 11 times in 10 years, opening up new bank branches and helping to build the company to a national scale. Got recruited to Freddie Mac in Washington. I became the senior vice president and headed the single family business for Freddie, which is everything that faces residential real estate I was responsible for. Did that for 3/4 of a decade, and my top client was Wells Fargo, and they recruited me to be executive vice president, and I ran a big chunk of the mortgage business for Wells, about a $30 billion business. And I did that until Wes Foster reached out to me and convinced me to come over. Initially, I came in to run mortgage and the affiliated businesses, and then ultimately he made me president and COO of the entire real estate company, which was a great experience because I got to work with agents every day and people on this side of the business. Probably would be there today, but when President Obama got elected, I received a call from the White House asking me to come in for a meeting, and before you know it, I had agreed to take a pay cut and go through Senate confirmation and join the president's housing team. That was 2009. You all may recall the Great Recession. And he had put together a pretty formidable housing team to try to resolve the housing crisis. And I was a key player on that team. I became the federal housing commissioner for the president. And that's just a whole experience. It's pretty bizarre to think back on, but got to enjoy that. And my wife got to go to a lot of holiday parties at the White House. And then when I left the administration, I was, looking for what to do next. And the Mortgage Bankers Association, that's the trade association for the mortgage industry in Washington, recruited me to come in and be president and chief executive officer. So from loan rep to working for a president to running our trade association, kind of an odd pathway. You don't normally end up there, but it ended that way. And I'm along the way, got to know real estate really well. My Libby, who works for Compass, is my sister's sister. They're one of 11 kids, a big Catholic family from Denver. And real estate runs through that family. A couple of her brothers actually started with Remax when Remax was just a pup back in the 80s. So I've been around this side of the business for my whole career. And great to be with you guys. So,
well, I actually decided I think this is going to be a 4-hour interview because I have so many questions about so many aspects of your career. And for now, Long and Foster mainly was the East Coast. Wes Foster, a legend in real. It's like Gary Keller or Buffini, right? There's some names that are just legends within real estate. So it was only East Coast, or did you guys go anywhere beyond?
Yeah, it was only Mid-Atlantic, and surprisingly, it grew to be the biggest privately held real estate company in the country that Wes built. But I think I had at my peak around 340 branches with about 14,000 agents, as I said earlier. So he built a massive organization. Ultimately, they sold to Warren Buffett. So they're part of the Berkshire Hathaway family, although they've kept the Long and Foster brand, at least for now. So, yeah.
Yeah, it's great. Well, let's go back to those days, the early days, like Wes Foster and like Long and Foster. What were some of your running that really, really big, well-respected, like amazing company? What were some of the lessons you learned from Wes Foster, like working for that man?
Well, Wes had a passion for real estate. And he grew up in old school. Like, when I met Wes, he was already getting close to retirement, although I don't know if Wes was ever going to retire until he absolutely had to. But he loved talking to real estate agents. He loved making deals to recruit agents. And so I won't share too much details about our comp plans. If anybody's former Long and Foster here on this call you know how that went, but it was, anything to recruit in a top team and customize what it would do to get that person on board was what Wes was all about. He was all about owning the market that he operated in, again, that mid-Atlantic region. And for many people, he was frustrating because, you want a lot of people wanted to get policies in place to run the company, and Wes would come in and just, get involved, and off we went to the races with whatever Wes's desire was. But
Yeah.
I really loved working with him because I grew up as basically a sales guy. It really helped me in Washington, by the way, with working with the president and Congress, but because communication skills are communication skills, right?
Yeah.
So, but in the end of the day, yeah, it was, I enjoyed Wes's frenetic style a bit because, I think change is how you improve. And back in the day when I was with Long and Foster, Keller was just a brand new upstart company, and everybody was freaking out that they were going to take over the world with their, earn your initial whatever your hurdle was, and then it's 100% split and all of this stuff. And we were losing people to Keller back in the day. And it's just an interesting, as you own a real estate company or run one, it's a very interesting competitive business to keep your agents, feeling like they're being supported the way they want to be supported in order to be able to be successful in their business. So it was interesting.
That's awesome. It's such I'm an East Coast, Pennsylvania, Midland. So, Jim Waker, Wes Foster, like these are names.
Sure.
Everyone.
We bought in Philly, Art Hurling. I don't know if you knew Art at the time, but we bought his operation, obviously. And anyway, so.
Yeah, we have interesting connections, David. So yeah, Art Hurling is an interesting name if you throw that
yes.
name, you get interesting opinions. Let's just say he won't be at Compass anytime soon. I'll put it like that. Anyway, so talk about 2008-9. I mean, I can't imagine what those conversations must have been like, because I was in real estate during those times. What was going into the White House and like getting confirmation and starting to work on what do we do to recover from this? It really is a tragedy, right? I don't know how else you describe it. I mean, it's a tragedy when good people, last week we talked to people, good people lost their homes where they shouldn't have, right?
Right.
What was it? What were the conversations like? What was that experience like of working in the government at that moment in time?
I wasn't a government guy. Like, I ended up being very involved in Washington and testified in front of Congress, I don't know, 20 times maybe. But my first day at the White House, I got a political science degree from the University of Colorado, which means back in the 80s, I knew how to smoke weed and I knew how to ski. And that was basically it. And so, sorry for being irreverent, but so somehow through my career, I ended up at a level where I was being recruited to go join the president's housing team in the middle of a terrible housing recession, really brought on the country by lending. Bad lenders doing negative amortizing, 100% finance, fog the mirror, subprime, 228s, 327s, and all this stuff that really took down the nation. Just far too liberal credit standards before the Consumer Financial Protection Bureau and all the rules that are in place today go bust. Yeah. And so I remember my first day walking into the White House, into the West Wing. I met in the Roosevelt Room. It's the conference room across from the Oval Office where you meet with the president. I just gotten confirmed by the Senate. It's early in that first year of the president's term. And I walk in and there's Tim Geithner, the Treasury Secretary, and I'm not going to name all the names, but all these PhDs from Yale and Harvard are basically sitting around the table. And here I am with my Bachelor of Arts degree in smoking weed and skiing, wondering what the hell am I doing in this room? So I immediately there's a main table and then there's couches in the back and chairs around the edge for other staff to sit at, to take notes and things of that sort. So I immediately moved to the back couches or chairs. I think it was the couch I was moving towards. And Tim Geithner, who I hadn't met yet, the Treasury Secretary, turns to me and he goes, "You're Stevens, right?" And I said, "Yeah." He goes, "I want you at the table." And so I I took a seat at the table. I was going to share the picture, but I don't have it on this laptop. But I have a picture taken by the president's photographer of me in the room with all those people. And I sat at the corner table. The president walks in, and I forget your politics. All presidents are usually pretty smart, and Obama was wicked smart, and he knew everything walking into the room. And so he immediately walks in. All these PhDs are around the table, and he says, "Hey guys, I've read everything for the meeting today. I just want to know one thing. What's a warehouse line?" Back in the day, lenders didn't have money to fund loans. That's what a warehouse line is for. So mortgage bankers need to draw off of kind of a big checking account that they have to fund their mortgages. And they do that still today. And liquidity, as we call it, had dried up in this country. So we were talking about using TARP funds to create a big warehouse facility to support all of lending in the marketplace so that housing could continue. And he goes, "What's warehouse line?" The table goes dead silent. All these PhDs, I'm looking around the table, I'm going, "You went to Oxford, dude." I didn't say that, but I'm thinking it to myself. Geithner looks down the table and goes, "Stevens, answer the question." Nice. So here I am, this weed smoking, skiing bum from the 80s who had learned a lot about our business. And what it taught me, seriously, is just like for all of you, is this a complicated business, man? People, need help and understanding it. And it doesn't matter what your academia background is or what your title is. They just didn't understand it. So I suddenly started explaining what a warehouse line is. I look up and here's President Obama looking at me intently in the eyes. And that was the beginning of my ride there. I mean, he never held a housing meeting. I once had to travel and he canceled the meeting until I could be back. So it was a cool place to be. And as you all know, if you lived through it, some of you got in the business after 2009, but if you lived through that period, it was the worst recession since the Great Depression. It almost took down the global economy, not just the US economy, but it was driven by the United States actions. It just almost took down the world because the sale of mortgage-backed securities was sold to investors globally. And it almost took down like Ireland. The Bank of Ireland, which is the biggest bank in Ireland, was massively invested in mortgage-backed securities from the United States. I mean, these things it was just very dramatic time. Every day we would, you'd start early in the morning and come back late at night, and weekends and holidays, et cetera, because it was a pretty desperate period there at its peak.
Well, and just as someone who lived through it, I got my license in 2002. I was a teacher. Left in 2005, like, wow, this is amazing. I love this industry. And I always remember, I think it was October of 2008 was the first month. I was very successful at selling lots of houses. October of 2008 was the first month that I didn't sell a house. And it wasn't I don't even know when I'm going to sell a house. And then the day that the first time home buyer credit got passed.
Yes, I was part of that deal. Yeah.
I'm personally going to thank you. That actually made my career because at the time I was 31 years old. Every single person I knew was a first-time home buyer. And
exactly.
What it did, it infused in the real estate industry a positive talk track that we could use within the business. It was like, and honestly, I think it saved the real estate market in many ways.
Yeah. Larry, there's a guy named Larry Summers. I don't know by the way, Trisha said in the chat, watch The Big Short if you want to see what this recession was all about. And that's so spot on. The Big Short is absolutely the best movie story about this. It's factual. But, it is funny because Larry Summers, who's the former president of Harvard, I don't know if you saw that movie about Facebook, and he's the guy who argued with the twins that he wasn't going to pursue. Anyway. So Larry's still very active. He may be the Treasury Secretary again if Janet Yellen leaves. I hope they don't pick him. But he was head of the National Economic Council. So he was the guy I sort of reported to. He called all the meetings for the president in the White House. And Larry hated that $7,000 first-time homebuyer tax credit because he thought it forward sold a lot of real estate. And then there was a lull kind of after the tax credit expired because it exhausted kind of the activity on purchases. But it was an interesting one, and it definitely helped the market. That and HARP refinancing and HAMP to help get people out of their trouble scenarios, and all of this is just a lot of acronyms we all invented to deal with a housing crisis.
Well, and I think it's funny because I think it's the kind of thing where people talk about like, whatever your politics are, there are definitely moments in our history. I'm a history teacher. I love history. And there are moments in our history where the government has absolutely stepped in to ease things and save where we are. So Dave,
Yeah.
not to jump to today, but to jump to today, in my opinion, from going through '08 and today, we are in a very vastly different situation today. Luckily, because a lot of government policies that were enacted to protect us today. But can you give everyone your analysis of the real estate market we're in today, like how it differs? And probably it's a long question, so we can even break it up a little bit. But really, I want to see what your thoughts are on where 2023 could lead us.
Yeah. So I'm going to look. I'm a markets guy. I live in capital markets, basically. I mean, yes, I ran Long and Foster, but I was running a company, and I've traded hundreds upon hundreds of billions of dollars of mortgage-backed securities in my day. And I'm going to tell you guys, and I do this in a lot of speeches for real estate firms, but I'm normally showing a presentation. But you guys are on the front doorsteps of what's going to be one of the biggest purchase sprees that this nation has ever seen. And I think people shake their heads when I say this. It's not conjecture, it's not guesswork, it's demographics. And I wish I was on a different unit because I'd share the picture, but there's, if you take the distribution of all Americans in the United States using Census Bureau data, and so many economists are using this slide, they make it themselves, but they all look the same. The peak year, the median age for first-time home buyers in this country is age 34. If you look at 34-year-olds, if you look at the whole distribution of America, there's a little bubble and then it tails down where older people are aging out. The volume of Americans who are coming into age 34, 33, 32, 31, 30, all the way into the mid-20s, it's the biggest bubble of demand that this nation will have ever seen for home buying. It's people want to like say, oh, I don't think so, or whatever. All I do is look at data, and data says we're going to get through this. Why do we feel so bad right now? Because of Powell. The Fed is tightening. It's called quantitative tightening. The Fed's raising rates to slow down an overheated economy. We're almost done. I have 3 articles. I could send it to you afterwards.
Yeah. From
Forbes and Bloomberg. I'm actually writing an article about this now for a publication. But we're on the tail end of this quantitative tightening. In fact, that when the Fed meets at the end of the month, they're probably only going to raise a quarter. So they've been going 75 basis points at a time. Then 50 was the last round. This is likely only going to be a quarter. And then the question is, will they do another one at the end of February, early March? I think they'll be done personally. I think the economy has already slowed so dramatically that the data will show that to them. But mark my words, gang, the moment the Fed says QT is over, money is going to flood into the bond markets in the United States. People aren't buying mortgage-backed securities right now, and they're not buying a ton of treasuries because they don't know what yields are going to do. And as long as the Fed's tinkering with yields, there's no confidence. We call it convexity. There's no confidence in the duration of how long any bond's going to stick around, or a mortgage-backed security might refinance because rates are going to come down. The moment the Fed announces he's done, Powell announces he's done, then money's going to start flooding into the bond markets. That creates more demand. That means the price of mortgage bonds go up and the corresponding yields go down. So just like you've seen rates come down from the 7% highs to around 6 today, wherever they're bumping around, I can assure you, if you look at normalized margins, by the end of the year, we should have rates somewhere around 5.4 to 5.2 based on today's 10-year Treasury rate. And you're not going to, and the demographics of demand will be back in, and they'll be coming out of the woodwork to buy homes. And you'll be back to the same problem. Many of you are already still there. We never left it. But we'll be back to that same seller's market challenge where there's not enough inventory, and that's not a solvable problem short run. And, you're going to need to have a non-contingent full price cash offer or whatever you can put in place to avoid, to wipe away as much of the competition as possible when you put those offers in. So your frustrations around inventory will remain. But sometimes people try to tell me this is a repeat of 2008. Whoever says that doesn't understand demographics and market movers, and it's just non-comparison. This is almost over. Second half of this year, we're going to start seeing an increase in purchase demand. Next year, purchase transactions are going to be significantly higher than this year, and the following year as well. And I could share with you several forecasts from Lawrence Yun from NAR, or Mike Fratantoni from the MBA, or Duncan from Fannie Mae. All these economists, everybody's saying the exact same thing about the market because they know the core variables of supply and demand, which is what drives our business.
Yeah. David, if anything you want to send me, I can redistribute out to the group as well.
Okay.
After you.
I'll send you a few slides.
I've been traveling around the country teaching, and in each market, the way I describe it is that you feel the energy right now in the market, and it's like you're in the ocean and you sort of feel the wave coming before it hits, right?
Yes,
like
right.
That's the way it feels right now. And for all the agents that are listening to this, like, we have a window of time to get the things done, the foundational things that you should be doing in your business, like a CRM organization, the plans, all this stuff, and then it's going to be busy. It is going to be busy. We got to.
If I could just, and if I could emphasize, the one thing that you can get from folks, whoever it is, I'd be glad to do it someday if you ever want to do it as a presentation format. I can give you the data slides that are really easy for consumer to understand, which tell this story without having to make it up or try to search, where do I find this stuff? I just have the benefit, having been a significant player in a presidential administration, that every economist sends me their stuff all the time. And I pick out the data that I think really will work for potential home buyers. Because home buyers who say, I'm going to just wait this out. I want to see, wait till real estate prices level out. It's an absurdity. One of my slides is the history of home prices in the United States going back to 1955. It comes from the Federal Reserve of St. Louis. It's the median sales price of all single-family homes in the United States going back to 1955. That's 11 recessions, by the way, since 1955, 11 recessions. And through that entire time, home prices have only gone up. Yes, they may correct for a period of time. The Great Recession was the worst correction, but they always recover, not just back to that level, but above that. And that slide from the Federal Reserve of St. Louis, which is where you pull data from, it's called FRED. In fact, you could Google it. Just type in FRED, F-R-E-D, median sales price of single-family homes sold in the United States. That slide will come up. It'll take you to the website.
Someone right now is going to bring it and put it in the chat. So someone,
if you could see it. But the reality is, gang, that data overcomes emotion. I really think that facts help level set you. And I think that the biggest challenge that real estate agents have, and loan officers, frankly, is they have to oftentimes sort of make up their own story about what's going to go on in the market. And they get pummeled with a lot of people who are negative. And negativity right now is rampant because nobody understands how the market operates. And so stuff like this can help in terms of, in this case, in my view right now, I think we ought to be motivating potential home buyers to get off the dime and go make the offer now before the market heats up later this year, because at least now you might be able to bargain on something. Maybe it's price, maybe it's a home inspection, for God's sake, or maybe it's a temporary buy down, who knows what.
And I believe too, like, if you have people that need to, like, the buy sell people, this is their window, because they're actually going to time it in the buy and then sell if they can afford to time this right. Like, man, I really want to stress, guys, we are in a really nice little window here that we have an opportunity, and I'm so motivated right now to get in front of as many people as I can to just preach. As I wish we had 10,000 people on this call right now hearing this. And David, if you're comfortable with it, I would love to coordinate a time where we can actually get thousands of Compass agents on a call to hear some of.
Yeah, whenever, of course. I do this for as Compass Groups a lot. Again, because of my relationship in the Mid Atlantic.
Good thing, Livy.
Oh,
Thank
glad
you
you-
so much, Livy. I'm so glad you married to this family.
Well, it's funny. I did Brian Buffoon at I don't know, maybe a year ago. There were 124,000 people, realtors who listened to that podcast.
That's
You
amazing.
need to get good information to help you communicate more effectively about what's going to happen. Because at the end of the day, I view the real estate agent as you're the front lines for consumer attitude about housing.
Yeah.
They don't have anywhere to go, and they read terrible media. It's not well educated and likes to inflame whatever the story of the day is. And they'll
Yeah.
turn to you. They'll say, "What do you think?" And you don't want to tell lies. You don't want to make up stuff. You want to be able to say things that are factual, and that's where good information can help. Anyway.
Amazing. And what we can do after that interview is produce assets for you guys to use as well. So